What is up, guys? Welcome back to my channel, and today we're going to be talking about the bull case for PayPal and what you guys need to know. In my last video, I broke down the bear case, but in this video, we're going to be talking about all the good things about PayPal. So let's not waste any more time and get into it. But before we get into today's video, I've recently opened a Patreon account, and this is where you'll be able to see a bull case, bear case, and base case for PayPal. I've broken down all the numbers here and the link is in the description, so make sure to check it out. So now let's get into my first bull case for PayPal, and that's the recent results of PayPal. They've been absolutely outstanding, and the first quarter of 2023 was definitely part of that. So in the first quarter of 2023, they beat on the top and bottom line, which considering the inflation rate was still extremely elevated at the first quarter of 2023. The total payment volume of PayPal has been increasing very comfortably. They've gone from 300 billion mark all the way up to 354 billion, growing around 10 to 12% on the FX neutral basis. Then when you include the revenue, that's again grown to 7.4 billion, and that's growing at a 9 to 10% rate as well. And this is considering that the stock is down 80% from its highs. So you have to consider the business seems to be getting better and better, yet the stock price and performance just is getting hammered day after day, week after week over the last 6 months. Now, at a clearer view, we can see the Q1 23 highlights. We can see the net revenue obviously grew 9%. We can see the non-GAAP 10%. And then when you include the operating income, that was a 41% year-over-year change. That's absolutely insane. And that shows the company is becoming more profitable and that the total volume payments is clearly expanding. And those fees are clearly driving that performance in operating income. And that's also translated into the earnings per share, where we can see there's been a 61% year-over-year change. And then again, when you look at the non-GAAP, a 33% change. So where PayPal thrives is when people are spending money, obviously, they generate further transactions, which in turn creates larger fees for PayPal, driving that revenue and then essentially driving that bottom line. So we can see the total volume payment has been a key driver in translating into the revenues, into the EPS, and into the cash flow. They grew that total volume payment from 323 billion in Q1 22 to almost 355 billion in Q1 23. And we can see it's translated into the net revenue. It's gone from 6.4 billion to 7.4 billion. And then EPS has obviously done the same, as we saw in the previous slides. So this can then be shown in the balance sheet and liquidity. So as they're driving that greater cash flow, it's improving their cash position on their balance sheet. In 23, they ended their cash and cash equivalents with a total of 15.3 billion, we can see here. And then their debt, their total debt, I should say, only is 10.9 billion. So they can clearly finance their debt very quickly just with the cash on hand. And then when you consider that their cash flow from operations is at 1.2 billion and their free cash flow is at 1 billion, they can easily service that debt, no problem. So we can see it's got a strong cash position. They're growing revenues, they're growing EPS, and that total volume payment is growing, which is the most important factor for PayPal. Now, another massive bull case for PayPal is that they've been repurchasing shares. They've been delivering huge amounts of buybacks of around 4.1 billion back to shareholders, approximating 48 million total in the last 12 months. And in the last quarter, they repurchased 19 million shares back to the common equity shareholder, which is obviously us if we are a PayPal shareholder. So this is something that is a very nice thing to see because we're not being diluted as a shareholder. We are gaining more of the pie of PayPal, and this is great to see from a bull case perspective. On to my next bull case for PayPal now, and that relates to the bear case, which is where is the next growth drivers going to come for PayPal? And I believe that growth is going to come from Venmo. Because in 2017, they were doing $160 million in revenue, and that's already grown to $935 million in 2022. And that's going to be projected out all the way for the next few years to do over $2 billion total. And this will drive that total payment volume, which will only increase PayPal's profitability in the future and drive their bottom line, and then increase that EPS number with the buybacks that they're doing as my previous one. So this is where I think Venmo is extremely interesting, because it's very sticky platform. It's lots of users are using it, especially the younger demographic that are using it for traveling, for using it for all types of payments, and it drives greater volume, which incorporates a greater sticky platform for PayPal. So using the actual table they have here, we can see the total payment volume expected to be in the end of 2022, which was 244 billion. And we can see in 2014, it was a mere 2.3 billion. So the scalability of this business is absolutely massive. And then you go further down and you can see the users that PayPal are actually generating from, or Venmo are generating. But we can see that the users has gone from 3 million, I should say, in 2015, all the way up to 78 million users. And that will only grow even further and then be incorporated into different markets, which is going to capture a lot of new revenue and drive that total payment volume. So we can see that the valuation as well was estimated to be around 0.1 billion in 2013. And now it's estimated in 2020 that the Venmo valuation is at 38 billion. Well, when you consider that the valuation of PayPal is at an $80 billion just total, and you are getting Venmo for basically 40 billion. If you incorporated that, that means you're paying only 40 billion for the complete rest of PayPal, including their cash on hand, including Braintree, and including the PayPal service itself. It seems extremely cheap. Switching over to another growth platform where PayPal can drive that revenue is a company called Braintree. And Braintree is another financial technology company which primarily focuses on B2B. And this is another huge market which is poised for growth in 2023 and beyond. So they deliver payments volume as well, just like PayPal and Venmo, but it's all through that PayPal credit system, which is transacted with businesses. And you can see that when PayPal is actually a service on businesses' website, it boosts that conversion rate 88.7%, basically determining that people are more willing to pay and actually use PayPal services because they feel more protected with the name. So this is where Braintree can be a huge growth driver for the B2B section. It increases that conversion rate, as we can see here, and that makes the business very sticky, and it gives us a lot more data in terms of how that total payment volume is driven through the B2B section and also B2C. So we can see here that you can use it, and it will give customers the flexibility to spread their costs across purchases, because Braintree also uses kind of buy now, pay later scheme. And again, that can then translate to further revenue platforms and further sources which PayPal can use. And then when we kind of scroll down a little bit further, we can see a few of the names that Braintree is partnered with. And these are massive companies: Airbnb, Uber, StubHub, we've got Facebook Messenger, and then many, many more as well. So we can see this is another platform which has huge growth revenue potential. And that B2B segment is another platform which PayPal is going after. And it increases that conversion rate, as I mentioned. And it's another thing that PayPal has in its arsenal to drive that growth and drive the potential sales of PayPal in the future. Finally, let's talk about PayPal's valuation, because this is my final bull case for PayPal. And I think the valuation on this company is far too cheap to actually warrant how much growth this company can drive for future years. So we can see at an enterprise value to EBITDA, PayPal is trading at about 10 times to 11 times the actual EBITDA to enterprise value. And this is way too low for a company that's growing 10 to 12 to 15%. And we don't know what it's going to do in the future, but we can speculate that they're going to be kind of low double-digit numbers. And when you consider that they're going to double revenue in the next kind of 5-10 years at a 10 times EBITDA to enterprise value, or even a 14 times market cap to its PE, then we can consider this company is too cheap. And this is where we come in and we can pick up these cheap shares. And realistically, a company of PayPal should be trading closer to 20 times with the growth when considered. Now let's consider the estimates for PayPal, because the estimates Wall Street have gone with are extremely interesting. They're expecting currently a revenue run rate of around 7.5 for 2023 and 9% for 2024. And we can see that that would increase their revenue by around $3 billion. And then we look further down, we go to the EBITDA now. They're expecting 7.5 billion for the end of 2023 and 8.5 billion for the end of 2024. We're always forward looking when looking at stocks, just like the market is. So if we take the $8.5 billion number and we think that they can actually achieve this number, that means the enterprise value to EBITDA would be trading closer to kind of an 8 to 9 range, which would be far too cheap when you consider they're growing 12.5% in EBITDA. Then we can see further down, their net income is also expected to be around the 6 billion mark, and then the EPS is supposed to be expected to be 5 to 5.6. So these numbers are extremely very low in terms of what PayPal can produce. It's questionable whether or not that some of these numbers may be too high, considering all the factors when we consider interest rates and inflation, and whether or not there could be some recessionary concerns in the future. But if PayPal do hit these numbers, the stock will be massive. And let me say that again, the stock will be absolutely massive. It wouldn't surprise me if they hit these numbers, and then before you know it, this company could be $180 within 6 months to a year. Now that's dependent on a lot of factors, but realistically, it's a high possibility when we consider kind of the growth within PayPal and what they can deliver with the different types of revenue streams through Venmo, Braintree, and just the PayPal legacy business itself. So in summary, when looking at the bull case for PayPal, it's clear that this company has a lot of value behind it. The numbers are extremely attractive. You have huge growth drivers in Venmo, Braintree, and just the legacy business itself. And these factors can be a huge driver of total payment volume, which can improve the bottom and top line of PayPal itself. The logo of PayPal and the brand itself is widely known, and the business is getting much more sticky with these different platforms that can introduce the B2B and then also the B2C with Venmo. So when we combine it all together, we get a very rounded business that has huge opportunity for the future. So when looking at the bear case, which you can check out my video in my last video, we consider a lot of these other factors such as competition, the CEO potentially leaving, and other factors when looking at the numbers. However, the buyback situation is another bull case that we can consider, and the recent quarterly earnings show that this company could be back on the up for 2023. Now, if you guys enjoyed this video, make sure to leave it a like, share with some friends, and subscribe if you haven't already. And I'll be putting much more on PayPal and other videos coming out soon, so make sure to stay tuned. Thanks for watching, guys, and I'll see you guys in the next one.